Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris rapeseed, Winnipeg canola, and Malaysian palm oil markets. I'll start with Paris rapeseed. This one has been a harder market to fathom compared to the others today. The certainty here can be seen in the monthly key reversal down in November, which was immediately countered with some vehemence by a bigger key reversal up in December. Apart from that, well, we did have the ascending triangle, a sort of ascending triangle formed from mid-September to mid-December to 2021, with a break upwards in late December 2021. But apart from that, well, not much. However, what was interesting about this pattern was that target X topside for this move up and out of the sort of ascending triangle was at 761, and the market reached this target at the start of January, breaching it but not closing over it at any time. Hence, this does indeed verify the ascending triangle pattern as valid. In addition, though the market pushed up over the 50% projected Fibonacci line at 750 even, there were, interestingly, no instance of two consecutive closes over it. Thus, these were perhaps the first signs that the rise was at the least being tempered, and as we've seen since, being pulled back lower. The fall during the rest of January was halted last week, and half of the prior week as well by the congestion between October to November. And that's between 685.5 and 651. This week, prices dropped down into this congestion, but by Tuesday, prices ran into a load of technical base support, consisting of the August 2021 to date uptrend, currently at 661 even, the June 2021 to date uptrend, currently at 664 even, and also the closely associated medium moving average, currently at 666 3/4. These stopped the fall this week and have started a nascent move back up. This is where we are now. So what does the way ahead look like? Well, I have drawn an also nascent bullish Andrews picture for the late November 2021 to this week action. Now, I'm not wedded to this pattern. I'm happy to mutate it into a bullish shift picture or even retire it completely. But it is an idea I'd like to float forward at this time as a possible bullish bias potential pattern. Winnipeg canola. There is a somewhat uncommon, well, to me at least, uncommon pattern being organized here since early November 2021 and up until today. It is a sideways pattern and is known as a possible rectangle pattern. And that's currently between 945.05 to 1038.55. Now, I'd highlighted this in my last commentary with an axis seemingly around the May 2021 high in the 1007, 1008 area. Interestingly, the move lower in early January was halted just ahead of the base of the rectangle by the rising medium moving average, currently at 955.5, which caused a combined key reversal up and bullish engulfing pattern on Wednesday last week. The May 2021 high then capped the market late last week and on Monday this week, with Monday making a big key reversal down. Yet, there was no follow through to this important bearish pattern that had been formed on Monday. Instead, we had an indecisive spinning top on Tuesday and then a small bullish engulfing pattern yesterday. Today, we've tested back up to the May high again. Tested, but so far not breaking it. With two daily key reversals within days of each other, one bullish and one bearish, and the bullish one looking like the valid one, well, it casts a question of the whole 1007, 1008 area. To finish off with, I'd like to discuss the outcomes from this possible rectangle pattern, should it be broken. At first glance, it looks like a topping pattern. However, that is not necessarily the case, as such a pattern could also be a continuation pattern. Overall, the chances of a break higher are actually about 65% of the time, which seems counterintuitive. Nevertheless, that is what the data indicates. Additionally, breaks higher perform much better than breaks lower. Now, I'm not minded as yet to place targets, not just yet. But to give you an idea, a break higher could see a potential move up to the 1111 area, while a break lower could see a potential move down to the 895 area. One further point. If we have a determined break either lower or higher, and it reverts back within the rectangle, then there is a very high chance that the market will move in the opposite direction to the original attempted breakout. The chances of this are something like 7 to 8 times out of 10, so be wary and just remember this. Bursa Malaysia crude palm oil. First off, please continue to try and ignore the color changes on the labels on the daily chart. There is no special significance to them, it is just my charting system playing silly buggers. Anyway, the key feature to look for here is one that I've droned on about for months and months. It is the January to June 2021 bullish Andrews pitchfork, marked on the chart. We have seen action around the middle time yesterday, currently at 55.47, when we saw prices close over it for the first time since November last year. And also recently we saw action with some effect at the lower time, currently at 47.20 in December 2021, when an attempt downwards was rejected by the lower time, in conjunction with the long moving average, currently at 45.70, and the previous all-time high from March 2008, and that's at 44.84. Anyway, we are still well within the bullish Andrews pitchfork, and it is dictating the bullish angle of attack. The next feature now is either a new September 2021 to date nascent upper bull channel line, currently at 57.30, and I've not exactly expressed thoughts about that, or the next projected 50% Fibonacci line at 57.63. Last week's action gave an interesting, if unusual, impetus to the move higher, as we had a weekly key reversal up, but only on my charts. You see, I use continuous daily charts, always have done, as I get better definition and more data to work with on that. And the gap higher between Monday and Tuesday last week was not reflected in the individual monthly contracts, so only on the continuous chart. It nevertheless seemed to work, looking on the way the markets reacted. Now, looking finally below, keep an eye on the late October high at 53.26, and the broken October to date downtrend currently at 51.84, around the gap left in last week's strange move between 52.01 and 52.45, and of course the short, medium and medium moving average is currently 50.91 and 49.80 respectively. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.